Hello, beautiful people. Welcome back to the channel. Welcome back to another weekly outlook where we're gonna dive into the marketplace, take a look at what kind of setups we're looking for the upcoming week, and we'll give you some insight into how to navigate the upcoming week in terms of risk management, draws on liquidity, and the best setups you can find. As every single week, we start with the economic news calendar. The economic news calendar itself is bringing us a very easy week to navigate if you're gonna put your risk management up to the standard and keep your account balance safe. Looking at the economic news calendar itself, we're looking at a Monday that we're not gonna be engaging with price itself because we have no news drivers on Monday itself, meaning there's no possible high probability trade entries for us. And Wednesday itself is hitting the marketplace with FOMC meeting minutes. FOMC is a two-stage event that throughout the Wednesday itself up until 2 p.m. New York time, we're not going to be looking to engage with price at all, and we're going to take a look at price action at 2:30 p.m. to see where the real move of the day is happening. CPI is hitting the markets on Thursday. Also, CPI is something very lovely that we use for price engagement every single month. CPI is going to be a one-sided news release, one-sided event where the market is just going to shoot up or fall down like crazy and will never retrace. But we're gonna look for that retracement. We're gonna look for that one-sided move back into the marketplace at market open on Thursday itself. So avoid trading on Monday. Tuesday, keep the risk to a minimum. Wednesday, avoid it again. Take a look at the marketplace at 2:30 p.m. after FOMC releases. Thursday trading is gonna be hard because CPI is gonna release on 8:30. And it's gonna be a very wide marketplace that we're gonna engage on Thursday opening, and Friday is gonna be lovely. So if you like what we're doing here already, leave a like to the video, subscribe to the channel if you're not a subscriber yet, and don't forget that we do this every single day on the Discord. So Discord link is down below in the description box of this video. And without any further ado, then let's dive in, starting with bonds. So far, so good. We were expecting lower prices. I literally kept these arrows on the chart on purpose because we drawn them out last week. And we're staying to the same analysis. The marketplace has been able to deliver lower prices. I'm watching this daily imbalance at 121.15 to 120.14 as a possible support. This is my drawing liquidity. Yes, I'm looking for lower prices, but I'm interested in the price finding support here and pushing the marketplace to the upside because we want the dollar index falling lower. We want the forex pairs going higher. We want indices to run up until the election starts, right? So I'm gonna be looking for bonds to find support down here and to shoot up into the order block level of 125.3. If the marketplace starts closing lower this upcoming week, watch the weekly imbalance itself. Everything above 119.24 is gonna be still bullish for us. Something that I didn't want happened. Feels sad, feels weird to say, but hear me out. We were expecting buy stops at 101.9 to be run through, but we wanted the marketplace to find resistance at this weekly imbalance and not shoot up any higher than this. Now, watch this volume imbalance itself at 102.742 and 102.674. If the marketplace puts in a top of the week on Monday or Tuesday, this upcoming trading week on dollar, lower prices is a possibility. If that becomes a failure, we're watching two very important levels, 103.3 right here and 103.546. Why? Because we're gonna have a drawn liquidity on another weekly imbalance that just got inverted about 3 months ago. So we're gonna be watching this, and my drawn liquidity is staying the same. I'm interested in 99.75 to be delivered at some point. I'm interested in that. Dollar has nothing to do with going any higher than it is regarding fundamentals, regarding economics, regarding political events in the marketplace right now. So yeah, a little bit hard to navigate because we bounced so hard away from this weekly imbalance to the upside. But watch this and watch the liquidity resting down below. Marketplace going higher here actually brings us something interesting that we're gonna talk about in analysis on Nasdaq. So stay tuned for that. Let's focus on Euro now. Purely watching the chart here, we're gonna be in free fall kinda. Everything that is gonna bring the marketplace below this fair value gap that was booked in when? On 13th of August, the Tuesday. Everything below this is gonna crash the market towards 1.06 sharp. That is a massive fall. That is a fall kind of brings Europe into the third world country or something, you know. But jokes aside, this is gonna hurt. This is gonna hurt the marketplace because dollar index is gonna shoot up to the sky. It's shooting up to the sky. It's gonna bring euro lower. It's gonna bring futures lower. It might even bring gold finally lower. So we're gonna see. But in my analysis, I'm looking at very simply. If dollar goes lower, I would love to see that. I'm targeting this daily imbalance, and I'm targeting the imbalance that was gathered for us on Tuesday. Buy stops above, we're gonna have to close above Monday low to draw the price any higher than what we're looking at right now. And if the dollar continues higher, we're in a free fall. Right? We're gonna be watching lower prices, especially if the marketplace closes down below this daily imbalance of Tuesday, 13th of August. Yeah, I'm still keeping my hopes up on dollar going lower. If dollar goes lower, we're gonna watch the marketplace push us higher, possibly even close below Monday low. And if the closure above Monday low happens, the marketplace is gonna bring us towards the daily liquidity level at 1.2758. That is very unexpected though. That is hard to achieve. So I'm gonna say it out loud. Everything below Monday low, which is at 1.11138. I'm speaking like I would be working on a lottery or something. Everything below this key level in terms of a top of this fair value gap for on Tuesday is gonna be bearish for us on Euro USD. Take a look at this. This is a chart of pound, and this is a millimeter, a top that was millimeters away from filling this weekly imbalance, sadly, because it's not filled. I'm putting it into my notes, and you should too. We're gonna still draw up there. We're gonna bring the price higher, yet we're gonna have to find a correct time for the marketplace to do so. Now, what are we watching for this upcoming week? Again, just like with the euro, I'm gonna be expecting a little bit lower prices possibly, but if I'm looking for higher prices at all in forex, GBP is gonna be a much stronger pair that we can work with compared to euro itself. Why? Because this weekly order block is still holding in the price, and up until the point that that is broken, I'm not interested in the drawn liquidity lower into this imbalance formed on 16th of August. I'm not even considering sell side before that. So what has to happen for the marketplace to go any lower? We have to take a look at this. This is a very small imbalance, but we have to close below 1.31114 before going any lower. Now, up until that point, I'm actually interested in higher prices, especially if this daily imbalance gets broken to the upside. Now, I'm not touching it. I need Monday, Tuesday trading to come through to see what actually happens in the marketplace. If the marketplace goes higher and closes above this imbalance right here, cool. Get it with me. I'm looking for higher prices. If Monday, Tuesday closes below this imbalance right here, I'm interested in lower prices. I'm interested in daily imbalance down below being filled. Hope it's reasonable, hope it's understandable. If it's not, again, guys, we're doing this every single day in Discord. Pass by, ask the questions, and if you're, sorry to say that, too lazy to do that, let me know in the comments down below if there's any more explanations needed in what I'm looking for this upcoming week. On paper, looking at the ES is looking still bullish up until the point that we are below and trading below this weekly order block. I'm interested in higher prices still. I'm interested in this weekly imbalance right here holding in the price. So I'm gonna say it out loud as we do it pretty much every single week when the price is bullish. We're not looking for a top. Everything above this weekly order block is going to be bullish for ourselves. And if you ask yourself, how low can the marketplace go? This is the imbalance that is going to be very, very important for us. Everything above this, and especially the order block itself, is going to be bullish for us, and we're going to be looking for new all-time highs to book into the marketplace itself. Nasdaq is looking very, very similar, even though on paper it is weaker. I'm watching how this order block holds in the price. We bounce away from it the last week, and I'm watching the imbalance, and I don't want to see this weekly imbalance getting filled. Up until the point that this imbalance leaves and remains open, I'm watching higher prices to be delivered. Daily chart itself, we're beautifully bouncing away from that weekly order block, leaving sell side open, but we're not interested in that. We're interested in the marketplace to bring us higher, new all-time highs, even possibly. Yeah, just like we mentioned last week, we mentioned that the price might draw us lower. We created an SMT where Nasdaq failed to create a all-time high, considering the fact that ES managed to do so. That on a short-term perspective for the last 4, 3, maybe 5. Knowing that the marketplace brought the price lower towards equilibrium, towards the inefficiency that was left open on the weekly chart. And the marketplace bouncing away from it so quickly. Take a look at Thursday trading. Thursday trading brilliantly to the pip reacted away from this order block itself. That indicates bullishness for me. That makes me happy. That helps me to look for higher prices. And very, very simply now, everything above this weekly imbalance is gonna be remaining bullish for me, and I'm not gonna be looking for lower prices long term up until that point. Intraday price action, yeah, sure, why not? But overall bias is still remaining bullish up until the point that the weekly PD arrays are getting broken to the downside. And this is gonna be it from me. This is gonna be it from me, Ignas at Daily Pips Trading, and I'm leaving you with a very simple hope. I very much hope that you found this insightful. I very much hope that you're gonna be able to indicate the next draw in liquidity in the marketplace this upcoming week, and the risk profile itself, where we mentioned no news Monday, CPI releasing on Thursday, FOMC on Wednesday itself is gonna be helpful for you, and it's gonna help you preserve that capital. Enjoy, have a good rest of the weekend, have a beautiful upcoming Monday, and I'm gonna see you next time. Bye.